Hi everyone, and welcome to this week's episode of Market Drivers. First up, I'm going to talk about one of my favorite stocks, AMD. They say despite running from $2 a share to over $50 a share, it's not too late to buy because this company's various offerings expose it to growth in data centers, gaming, and more. Second will be a Crowdstrike review. They say the company has tripled since its March lows, which is not necessarily unusual, but they question if the stock has further room to grow. Next up, we'll talk about the no sale order put out by the CDC. This was fairly expected, but it is important news. Lastly, for this episode, the stock market is always right. They say this is contrary to the consistent belief that the market and the economy are disconnected, and he points to the fact that the market is up 43% from its lows in March. But the market also predicted the fact that the jobs report in May was plus 2.5 million versus minus 8 million. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying the Acura NSX, or if you're just getting started on your financial journey, definitely like and subscribe. The 2020 NSX comes with 573 horsepower, and it does that with a twin-turbo V6 and 2 electric motors. Their goal with this car was to bring the luxury of Acura to the sports car world. The NSX starts at $160,000 and can go over $200,000 with options. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First up, let's talk AMD. They say AMD has been one of the best success stories in the semiconductor industry over the past 5 years, going from $5 to over $50. And this is because they have exposure to data centers, gaming, and more. Since then, AMD shares have cooled down a little bit. They are down 3% over the past 3 months, as the rest of tech continues to climb. However, AMD looks strong going into its second quarter earnings to be released on July 28th. AMD processors serve everything from the gaming industry to data centers and computer markets. Their GPUs compete against the likes of NVIDIA and other gaming giants like Intel. The firm's ability to expand beyond the PC market into gaming and servers has really catapulted the stock. AMD's revenues surged 50% in fourth quarter and another 40% in Q1, despite the Rona. Last quarter's sales growth was driven by its 7nm Ryzen processors, and the company posted its highest gross margin in 8 years, which was up 46%. It is important to note that Apple is an AMD customer, and AMD also works with Microsoft, Google, and IBM, which have all announced that they will purchase the second-generation EPYC processor. They also mentioned the fact that their processors will be utilized in the new PlayStation 5 and Xbox Series X. You can see AMD's revenue growth since December of 2015, and it's basically gone straight up. AMD is up over 3,000% in the last 5 years, outpacing NVIDIA, Applied Materials, and Micron. It also has beaten the overall industry, up 19% versus 11%. Over the past 3 months, it has underperformed, being down 3%, while the rest of the market is up 17%. Despite outclimbing NVIDIA over the past 3 years, AMD trades at a massive discount compared to its competitor, at 7 times forward 12-month sales versus 16 times. AMD is also trading below its 12-month highs of 8.1 times. All of this is to say that AMD has had a massive run-up. However, the success of the company has matched that price action, and that there is still continued potential for growth, which would drive the stock price higher. Moving on to why Crowdstrike investors should be prepared. It says long before the Rona, the rise of cloud computing was one of the dominant themes over the past 2 decades, and Amazon essentially invented it in 2006. Since then, virtually every major enterprise has moved their computing over to cloud providers, which feeds into the software as a service business model, which allows users to rent web-based software as opposed to buying and installing it locally. It's cheaper and ultimately safer to keep data on servers than it is to keep it locally, but the cloud model does create some security risks of its own. Each endpoint, including every desktop, laptop, smartphone, or other device, is a potential point of entry for malicious attackers. This is where Crowdstrike comes in. Crowdstrike provides that endpoint security and delivers it via the cloud. Its security works behind the scenes and is invisible to the user, and the company claims the product reduces the utilization by 25 times versus its competitors, meaning that it won't bog down your device. Since its IPO, their revenues have grown exponentially, currently sitting at over $178 million. It narrates the point by saying, in early 2018, quarterly revenues were less than $50 million, and now they're closing in on $180 million. Of course, that is good news. The bad news is the company is not yet profitable. It hasn't had a single profitable quarter in its entire history, or at least not on a GAAP basis. However, losses are getting smaller and smaller at just 9 cents per share last quarter. It's worth noting that most of the losses are due to the high marketing costs, which should presumably help generate future growth. It goes on to say that Crowdstrike stock sells for around 40 times sales. Now, 40 times earnings would be a little bit expensive, but 40 times sales is predicting huge growth that may or may not materialize. So should you buy Crowdstrike? The author of this article says he is a value investor at heart, but fundamentals don't seem to matter today, and neither do valuations. Today's market is driven by virtually infinite liquidity coming out of the Federal Reserve, and all of the dollars that the Fed is pumping into the financial system have to go somewhere. They say they don't know when the party ends or how it's even lasted this long, but with no obvious end to the federal stimulus, the bubble might continue on for a while. They go on to say that the market is currently favoring high-growth tech stocks, and Crowdstrike certainly fits that bill. All of this is to say that Crowdstrike is overvalued based on its fundamentals, but the potential future growth is what's currently driving the price, and that future growth may or may not come to fruition. For me, I wouldn't consider investing in Crowdstrike unless I plan to hold the stock for more than 10 years, as I think Crowdstrike has a long time to go before it reaches stability. Moving on to a very quick review of cruise stocks. I did do a deep dive on Carnival Cruise, which I will link in the description. And immediately after that review came out, the CDC extended their no sale order. It was currently slated to expire on July 24th, but has been extended to September 15th. It says the move is not expected to change the timeline for the biggest cruise lines, as most international cruise lines had already suspended their voyages. And this caused Carnival, Royal Caribbean, and Norwegian to all go down. I don't expect them to trail off following this, and that's because I think this was mostly priced into the market already. If anybody thought that cruise lines were going to turn on July 24th, then you would be mistaken, and this makes it more official. Moving on to the last article of the day, the stock market is always right. To reiterate, they say that the stock market has recovered 43% since its lows in March, which was validated by the fact that the US economy gained 2.5 million jobs in May when it was expected to see an 8 million job loss, causing the unemployment rate to fall to 13.3% from 14.7%, far better than the 20% predicted. They go on to say that the good news was unexpected by everyone but the stock market. Clearly, the equity market had snuffed out that the recovery was ahead of pace. They say don't forget that the stock market is a leading indicator. It responds before we get the data, which is why the S&P 500 was in free fall prior to the World Health Organization declaring a pandemic on March 11th. And it's also why the three major indices have been climbing steadily. They go on to say that not everything is perfect. While the numbers were good, they admitted that it was probably overstated due to the Bureau of Labor Statistics not classifying employed workers who weren't on the job as unemployed. It also mentions that the Payment Protection Plan encouraged small business owners to rehire their workers so that their loans would turn into grants, and that following the completion of this, we may see the rate of hiring decline going forward. And they say that risk could grow if the new stimulus bill, something that the market is betting on, isn't passed. And it seems like that bill is less and less likely following the good payroll numbers. To further support that point, the Federal Reserve announced that in the coming weeks, it would start dialing back some of its monetary support, which caused the yield on the 10-year Treasury note to go up 0.085%, finishing at 0.903%. The Fed needs to be careful in this instance because if the rates go up too high, it could cause investors to see the easy monetary policy going away. So how do we put all of this information into practice? We trade or we continue to buy value stocks. Focus on things like credit cards, housing stocks, as well as hardware and semiconductor stocks like AMD. So to summarize, I continue to stay bullish on AMD. Their revenue continues to grow, and I think they have a lot of future potential. Taking a look at Crowdstrike, I also think they have a lot of future potential, but they are very expensive right now at 40 times revenue. And if you were to buy them right now, you should look at holding this stock for a very long time. Looking at cruise line stocks, the no sale order was extended through the middle of September, and it did cause the stocks to go down a little bit, but I think this was mostly priced in. Finally, the market is always right. It knew ahead of time that the recovery was ahead of schedule, and now it's time to invest in value stocks or continue to trade the market. Comment down below what you think of AMD, CrowdStrike, or the cruise line stocks. Or is the stock market always right, or is it actually disconnected? Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. So today's jelly is this guy who makes car sounds with his mouth, and he is extremely realistic with it. A little corny, but it's still very impressive. So here's what that sounds like.
How you doing this evening? I'm John McVicker. Alright, I'm now 17 in a new vehicle. I just got my license. Super stoked about that. My dad actually just bought me a Civic and we're about to go drive it right now. So let's go. Alright, now we're in the Civic. Look at that. I just got passed by a Prius. Alright, it's time for the F1 car, the very favorite. Gotta grab my helmet for optimum safety. You know, going over 200 miles an hour in my F1 car. Got about a 600 horsepower V12 engine. One-seater, doesn't weigh anything. You know what, safety only can go so far with the strap. Alright, here we go. We got ourselves a twin turbo BMW V8, you know, the brand new 2013. They're pushing some serious power out of there.
'68 Chevrolet, Pro Comp Cam, hooker headers, dual tube, standard issue 4-barrel, Holly carburetor, chewing tobacco on the dash. Go ahead, John, let's hear it out of the spackle bucket.
Out of the spackle. Here we go, going through the gears a little bit.
As you can see, he takes it very seriously, but if you're familiar with any of these cars, he is extremely accurate. Comment down below what you thought of his voices. If you want to watch the full video, it is linked in the description. Make sure you like and subscribe before you go, and have a great day.